Welcome back to this video as we continue the conversation about some of the most commonly asked questions about PMS. You made a very interesting point about time, right? A lot of DIY investors, they think that having an over-diversified portfolio or more number of stocks in the portfolio means that the portfolio is very safe. But the concept in a PMS is more a concentrated approach, right? How do we tell those investors that this probably might be a misconception or maybe not the best route to go?
Right. So, in my experience, I've seen people who have had some 50 to 60 mutual fund folios, and they're all small positions, and more than they'll not even have a double digit weightage in the portfolio. Everything is going to be single digit. And honestly, we're not able to understand what makes them do this, but it's not really going to help you in the long run. One, especially if you're doing this by yourself, then how many companies or how many mutual funds are you going to track and do the research and see when it's the right time to enter or exit? And if it's just going to be on hearsay, oh, this person told this, that person told that, so I've invested whatever I had at that point, it's not really going to help you in terms of compounding your wealth at all. On a PMS, it's a more concentrated approach. So you have a higher conviction in terms of what you're buying, and that is going to help you in terms of looking at it from a longer wealth creation journey. And since you have a professional helping you, they also know, right, what to be overweight on, what doesn't need to be overweight on. So all those aspects play a role, but over diversification is not really going to help anybody in terms of, even if they were to measure their own returns in their entire investing journey, it's not going to be of much significant difference.
But given that there are so many options available, some people just, it goes through via word of mouth that this has worked for me, it will definitely work for you. But we at Ithought, we believe that it's not a one-size-fits-all approach. We have PMS products that cater to different kinds of investors. So how do you think investors should go about picking the right PMS product?
See, one thing that I see as a issue, right, when it comes to people doing things in a hearsay basis, something that works for me need not work for you. And I might have very limited understanding of your finance and background. We might be in the same social circle, but our spending and saving habits can be very different. The amount of assets that we own or the way in which we want to have our asset allocation can be very different. So something that works for that person need not necessarily work for you. And this is what it leads to our previous point also, where it leads to over diversification, right? You'll hear this person say buy this fund, that person say buy that fund. So you'll just end up with so much on your plate. But taking a more concentrated approach and a more client-specific approach is what we do. So we stick to, like I said, our initial conversation is of course about understanding what each client wants, what their goals are, and tying that to what product will suit them. And then from there on, it is more in terms of when they enter the market, what kind of opportunities are there, how much we need to invest at that point. And again, we also see differences in someone who is a continuous and a disciplined investor versus someone who is not, right? In our own ecosystem. So all these things will be very different. At the end of the day, one medication works for you need not work for me for the same symptoms. So it is as simple as that. So something that works for your friend will not be the same solution for you. It can be different.
Okay, so now given that we've discussed in detail about what entails a PMS, it does come with a minimum investment amount, right? And it's a large sum. But not a lot of investors are aware of this. They are aware of a lot of other options available in the market, say mutual funds, which does not involve that minimum ticket size. How do we communicate to clients that this is more from a long-term wealth creation perspective and not the same as mutual fund investing?
So I think it's about having that conversation. Even sometimes we see people who just probably have that minimum entry level and just feel like PMS is a more elite or a premium product and they want to be a part of it the moment they hit that number. But I think we have internal parameters in place in terms of understanding, again, the client's goals, what his saving capacity is what is he saving towards, and how we can take him forward in that wealth journey, and setting milestones for him in terms of helping him, say, achieve $1 million corpus or a 100 crore corpus. So I think just because you have that minimum ticket size, you shouldn't jump right in. Have that conversation with the person that you're speaking to and understand what are the drawbacks also of for you, right? Like whether it's extremely liquidable, whether there are any exit loads, how long you need to stay invested in, and also look at the strategy that the PMS is offering, because in the market there are so many PMS providers and different products follow different strategies. So see how that sits with you, how the risk and reward ratio is, what suits your risk profile better. I mean, you should also be aware about what you want and also ask the right questions to your advisor so that they also are very transparent in terms of what are the terms and conditions that it entails. And then you can make a more informed decision in terms of how to go about it. And it is not like something is superior or another product is inferior, right? You need to, again, it comes back to our previous point where you need to see what suits you. For someone, maybe mutual funds is the route and that is their thing that they need to do. For someone, yes, PMS makes sense. So again, no two people are going to be the same. So understand for yourself and also from your financial advisor, and then make an informed decision.
I think that's a very interesting point that she made about how it's not a one-size-fits-all approach in investing across all products. It is very important to understand that every investor is different from the other, and it's important that you make the right decision for yourself. So just a quick last question. How would you speak about Ithought PMS products to your clients?
I don't think so I can answer that in the video here. So reach out to the number mentioned below and you can book a consultation with us, which is free of cost, and you can see us live in action.